impact. Julia, your thoughts on the session today?
Look, if we have a look around Asia, most markets were actually higher today with the two exceptions, Australia and New Zealand, which were lower. And in Australia, it was all about the commodities sector, which weighed our market lower. We did see iron ore prices once again lower after that BHP production report, which was better than expected. So it still looks like we're seeing high volumes of supply coming out, and we're seeing prices still moving downwards. Fortescue was the latest to come out with its production numbers. Now, the numbers look good, but there was some concern on whether some of the cost-cutting measures could be sustainable. So Fortescue actually saw quite a big fall. And of course, the other area was oil. We saw crude prices down a massive 3.3% overnight. And that was on the back of inventory numbers, which saw the worst stockpiles of inventory in around about 80 years for this time of year. So the energy sector lower. But of course, one stock that took advantage of that was Qantas, which was up by 2.7% during the session. And then the other area we were watching were the financials. Now, initially, there seemed to be a little bit of support creeping in for the financials on the back of that interest rate cut that we saw in New Zealand and some speculation that we could see Australia following suit. But then, of course, ANZ came out with its announcement that it would be cutting mortgage rates for investor loans, although it would be raising mortgage rates for investor loans while cutting the mortgage rates for homeowners. So that saw a negative impact on ANZ and the banking space. So altogether a negative session for the Aussie share market, but low volumes, and really it was very much about the commodity space today.
Have thoughts on this?
Absolutely, and it's such a hard space, iron ore. We talk about BHP, Rio Tinto and Fortescue, but don't forget Roy Hill. We're going to see more supply coming on the market here. So Fortescue came in at the top end of guidance. It was guiding between 160 to 165 million tonnes. Came in at 165.4 million tonnes. C1 costs were down at 22.16, and they're going to fall even further. So all these numbers seem great. I mean, $1.6 billion worth of savings throughout the last couple of years, another $1.4 billion worth of savings over the next year. I think what the market was doing here was, part of it was the iron ore price fall that we saw, but part of it was questioning whether this cost cutting is sustainable. And one of the things that the market looks at is the strip ratio, which is how much waste comes out when you're digging up this iron ore. And if we have a look at Fortescue, it looks like it could have been digging up some of its higher content ore or its higher quality ore, and that's not a sustainable strategy going forward. So I think the market was questioning the sustainability of some of this cost cutting, which has been great over the last couple of years, and the numbers look quite aggressive over the next year. But of course, we are seeing cost cutting not only for Fortescue, but all across the cost curve. So BHP, Rio, still the cheapest, and then you've got Fortescue and Vale vying for the next position.
Stock ending up 2.7% today, $11.84. Julia, just some of your reflection on the rout that we've seen in commodities, particularly gold.
Look, it's been an absolute horror week for gold, and it really accelerated on Monday when we saw that huge seller order for gold coming at a very illiquid stage of the day for the gold market, and that was as the Chinese market was opening, which was Sunday night in US time, where most of the gold is traded. And then, of course, we've seen falls since then. So now we've seen 10 consecutive sessions of falls in terms of gold, and gold is looking way oversold. So it does look like it is ripe for a short-term bounce. In Asia today, we did see gold prices slowly creeping higher, so we're watching the US session to see whether that gains any traction. Newcrest, though, demonstrating that some of the Aussie dollar miners, the currency fluctuations that we've seen have really moved in their favour. If we have a look at Newcrest's fourth quarter realised price of gold in Australian dollars, it was $1,532. Now, the average, the all-in sustaining cost of gold was 978 Australian an ounce. That means they were making more than $500 an ounce in Aussie dollar terms. And that's an incredible margin. So not surprising to see Newcrest moving up 2.7%, and that small bounce that we saw in gold prices in Asia saw that gold sector moving up as well. So we actually saw quite a good session for Northern Star, for Evolution Mining. A lot of those gold miners doing well today.
Interesting.